You know, when a company like Alphabet puts up these massive, record-breaking numbers, it's so easy to just assume everything's perfect. But is that really the full picture? That's what we're asking today. Is Alphabet actually as healthy as it seems on the surface? So today, we're going to pop the hood on Alphabet's latest financial report for the fourth quarter of 2025, and we're going to use some really powerful tools to cut through the noise and see what the numbers are really telling us.
Yeah, instead of just taking the headlines at face value, we're going to use the FinQ platform to peel back the layers of their official report. What we're trying to do here is find the real story that's kind of hidden inside all that data.
So here's how we're going to break it down. First, we'll look at those big headline numbers that everyone's talking about. Then, and this is the fun part, we'll dig into the fine print for some surprises. After that, we'll use a simple scorecard to get a feel for the company's overall health, and we'll wrap up by showing you how you can do this kind of analysis yourself.
All right, let's jump right into Section 1, the headline numbers. This is the stuff that makes the front page. We're talking big, impressive figures that look fantastic.
Okay, get a load of this. For Q4 2025, Alphabet pulled in a staggering $113.83 billion in total revenue. And that's not just a huge number, it's actually an 11% jump from the last quarter. That's some serious momentum. And the sheer scale of this company is just immense. We're talking total assets of nearly $600 billion. I mean, Alphabet is a true corporate titan. So on the surface, the picture you get is just one of overwhelming strength and non-stop growth. But you know, that's just the shiny surface-level stuff. Once you start looking past those giant numbers, the story gets a whole lot more interesting. So let's move on to Section 2, Surprises in the Fine Print.
The first surprise is actually a really good one. Wall Street analysts, the experts, they were estimating that Alphabet would earn about $2.01 per share. Well, Alphabet didn't just meet that, they blew it out of the water, reporting $2.27. Beating estimates by over 13%? For a company of this size, that is a huge deal. It's a really powerful signal to investors. But this is where the picture starts to get a little complicated. And here's where the plot really thickens. In that same quarter, Alphabet's long-term debt almost doubled. A jump of over 97% in just 3 months is just staggering. Now, this could be for a major acquisition, maybe a huge new capital project. We don't know for sure, but a move that big definitely makes you raise an eyebrow and want to look closer.
And at the same time, this one line item, it's called Other Income/Expenses, which can cover things like gains or losses from investments, it just plummeted by over 71%. So while the main business is clearly firing on all cylinders, there are some pretty significant, less than positive things happening behind the scenes.
So we're left with this puzzle, right? On one hand, you have this fantastic earnings beat. On the other, a massive, kind of scary spike in debt. How in the world are we supposed to make sense of these conflicting signals to figure out what's really going on? Well, that is exactly where having a clear framework helps. So in Section 3, we're going to use a financial health scorecard to bring some much-needed clarity to this whole complex picture. So to get that clarity, we can use something called a health score. It's a really simple but powerful idea, a single number that basically averages a company's performance across all the key areas. Think of it like a quick financial checkup. This score is built on 4 key pillars. You've got revenue growth, profitability, how much cash the company is generating, and of course, its debt levels. By looking at these 4 things all together, we get a much more balanced view than if we just obsessed over one metric, whether it was a good one or a bad one.
So how can you do this kind of analysis for yourself? Well, in our final section, let's take a look at the tools that make it all possible.
The key is to follow a really clear process. First, you visualize the data to spot the trends. Second, you use a framework, like that health score, to get a balanced perspective. And third, and this is so important, you always go back to the original source, like the official SEC filings, to check the information for yourself. You know, it all comes down to what Benjamin Franklin famously said, an investment in knowledge pays the best interest. Being an informed investor is all about looking beyond the headlines and really understanding the complete picture. So we'll leave you with this question. We've seen that even with a giant like Alphabet, the headline numbers just don't tell the whole story. With the ability to dig a little deeper, what story will you uncover in the numbers next?